Hey guys and girls, Nathan here from the Be Invested headquarters. Just want to give you a bit of a market update. It's been a while since I've done one. Lots of crazy things have happened out there since. So what's happening out there in the market? So, you can go to the news, you can watch a bullshit media that comes out, and you can see all those sort of stats that come through. And if you watch any of the media outlets from morning to evening, you'd probably have bipolar, because you'd be like, you told me this morning this and now it's this. And the news is very manipulated out there, as we all know. However, this is just my view of what I'm sharing. Where does it come from? It comes from, we do about 100 deals a month here at Be Invested, buying properties out in the marketplace on behalf of our clients via our buyer's agency. This is coming from writing tens of millions of dollars worth of loans every month for our investors, and managing properties for thousands of our investors out there. So the things that I'm going to share with you are just what I'm seeing out there, but I'm just one person, but I have a large exposure. I probably do more property transactions than anyone out there. So this is a real good hands-on on the ground sort of wrap around Australia. So I'm going to go from state to state as well, as all markets are slightly different. And within those markets, there's sort of micro markets as well. So what I'm finding, if we start off with Sydney, in the property market, the inner city, there are some good bargains out there. I've done 3 bulk deals recently in the inner city sort of areas. We've been picking up some cheapies. I just did a deal in Botany, picked up units, 2-bedroom units for 538,000 each. One bedder was 410 and one bedder was 390. So these units have car spaces and whatnot, and they're in Botany, so they're near Sydney Airport. These things here valued up straight away after purchase for about $165,000 more. So the 2 bedders valued up at 700. The 1 bedder's valued up at, I think, about 550. We bought them severely discounted in the market, and that was great for our investors, just because they're good buying opportunities out there. Picked up in Parramatta recently a bulk deal, which was 8 units, 8 1-bedroom units off market purchase. That was $290,000 a piece. Here we are in the CBD of the new Sydney, being Parramatta. We've got 1-bedroom units for 290 grand. Who would have thought? But that was a out of line sale. There's lots of activity happening out further we go west, and as we go into some of the more expensive, more affluent sort of family areas, so that middle family area, with all the McMansions and first home buyers and upgraders, right? There's a lot of activity happening in those areas. I'm hearing from some people out there that actually sell land and that stuff for first homeowners, and that the markets are very hot, like hotter than what they were back in 2011. So some markets are very hot, some markets are weaker. There's opportunities out there in Sydney. The cheapest thing I've bought in Sydney in 2020 is $229,000. 229 grand in Sydney for a property. Rent for probably in its peak for about 300 at the moment, maybe like 250, 260. And lots of buyers out there in the current market in 2020. As we go up, there's areas like Central Coast and outer of Sydney. Those areas are very, very hot. I think a lot of people are reconsidering lifestyle. They've been sold a lie. They go to work for a boss that they've been sacked from or put down from. They realise that their job wasn't so important, or if it was, that they can do it from offsite and work remotely. So there's a lot of growth and expansion into different places around the country. So I want to get onto that. Melbourne, I'm not even going to comment on Melbourne. I don't play in Melbourne normally. There's always been something that feels commie about Melbourne, and that's no offence to anyone who lives in Melbourne. I actually do like some parts of Melbourne, but from an investment perspective, I've always steered clear of it, because I feel like there's an oversupply for the amount of people that are there. And if you want to just keep building, you just drive 10 minutes down the road and you build another estate and a new suburb comes up, and you can do that all the way from Melbourne CBD all the way to Albury. So you're not spoilt with choice there. You're spoilt with choice down there. So I like supply and demand and parameters that are locking in a city like Sydney. We've got the Blue Mountains, got all these national parks around us. It's a Sydney basin. you're locked in there, and Sydney's sort of like the doormat to the country. So that's why I like Sydney. If we go to Queensland, I don't know why I'm pointing like north and south, south and whatnot, but in Queensland, the market is booming in the Gold Coast. A lot of activity happening there, a lot of activity happening in Brisbane and north of Brisbane, and all the way up the coast, actually. And I will make a separate video as to what I'm seeing about some market trends with regional cities at the moment. So keep an eye out for that video about regional cities. But a lot of people are moving to different locations for lifestyle rather than work, and a lot of people are moving from Melbourne to Queensland because they're like, I want to be in a communist regime. How long will that go on for? Who knows? But it's an interesting site. In Brisbane and Gold Coast, specifically Gold Coast, something changed in the Gold Coast last year in October. I don't talk about that openly. It's information that's purely for my property investors that I help out. So it's information that I help for them when we're securing there. But there's a lot of activity happening on the Gold Coast. Brisbane, very hot at the moment. North of Brisbane, quite hot. As we go further up, there's some specific areas which are booming. There's actually some locations which I'm not going to go into details with, which have doubled in 2020. Right? I kid you not, there are locations where we'll pick it up around Christmas time for 50, 60 grand that are now selling for $120,000, $150,000 for the same sort of property. So that's the entry level into the market. So there's been some areas which have doubled, literally, which you won't see reported in the news or in any of your little stat stuff, because you have to be on the ground to see these markets get gobbled up. As we go around to other states, I feel that Northern Territory, I'm not a big fan of. Like, I'm not active in there. I'm not a fan of there. So I don't purchase in there. So I can't give you no comment. I'll give you no comment on that one. As we go down to Adelaide, here's a bit of activity down there. I do purchase a little bit of stuff down there. There's some activity happening down there. I feel that most activity is happening in the eastern seaboard. There is some activity happening over on Perth. There is a bit of a activity happening in there. Not going to go too much in there because I do prance around in some pockets of Western Australia as well, and I'm not there to share with everyone exactly what my movements are in Perth. But there is great opportunities out in all of the markets. There's a lot of markets that are booming in 2020. There are markets that are falling in 2020. A lot of people go and try and chase that market that's going up, the next hottest market, where they can make a quick buck from, etc. I would personally prefer if we saw the whole property market implode. There's a lot of people out there saying, house prices are going to implode, wait until JobKeeper finishes, wait until all the mortgage holidays stop and principal interest kicks in, all that sort of stuff. Simple fact is, I'd love for that to occur, right? I'm the biggest advocate for property prices crashing because I would greatly benefit from a property crash. However, it's not what I'm seeing out there. I'm seeing the opposite. Unfortunately, the markets are heating up. There's a lot of activity out there. There's a lot of buyers out there. As I said beforehand, I want to give you some feedback, not just on property, but also on the finance front. We have had some of our largest months ever in finance. I built a finance company about 9 years ago now. It's called Zinger Finance. We do all different types of lending for people. Purchasing properties, principal place residents, helping them restructure their debt, helping them build large property portfolios. We have had some of our largest months on a finance front ever. That's just due to the fact there's a lot of activity happening in the marketplace. The banks are slow. There's two reasons for that. One, they've got an influx of applications coming through. Two, there has been lockdowns in other countries. If we look at a lot of the banks, they're based in Manila or Bangalore in India or Philippines, vice versa. So they're in lockdown, so there's a bit of short staff there has been occurring, but there is a bottleneck of massive amounts of people coming in wanting to get loans done. So looking at some of the big four banks, one of them, ANZ, for example, is a 6-week turnaround time at the moment to get a loan. So if you go to put a loan application in, they're so backlogged that it's a 6-week turnaround. Have never seen this happen beforehand. I think that if we look at where the activity starts and where the results and trickle down effect occurs, And if we look back at the amount of activity that's happening at the moment, a lot of people getting loans, a lot of people purchasing properties, etc. That's injecting a lot more liquidity into the market, a lot more money creation, and that could transpire into a property boom. Interest rates are at the lowest point ever, and they are tipped to go lower. I expect that we'll see another rate cut in 2020, and we will head into a negative interest rate territory whenever that may be, whether it be late 2020, early 2021. We are well on track for a negative interest rate policy. So when banks are paying you to take money away, what's that got to do with the market? So are we going to see the sky falling? Are we going to see prices collapse? I really wish that we would see that, but it's definitely not transpiring out there due to activity that's being witnessed in the marketplace at this point in time. On a rental front and property management, just before I do a wrap up, what's happening out there in the rental market? The rental market's quite strong. If we look at a lot of the stats from inner city, where there's been a lot of Airbnbs and those sorts of things, there is an oversupply of stock in those areas, where all Airbnb stock has been regurgitated back into the marketplace. However, in the general sort of market out there, I've got the lowest rental vacancy probably in about 3-4 years in the business of managing properties. Got the shortest rental list ever, and that's just sentiment. A lot of people are happy and want to have security in their life by not having to move during this time and all that sort of gear. Are there a lot of tenants that aren't paying rent? There's always a small percentage of delinquencies that you will find across a large property portfolio of thousands that we manage, but that is very, 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 very minor, and there has not been any influx in that delinquency. No long-term delinquency, and the short-term delinquency is just normal, what you'd expect to find on a day-to-day basis. So I guess the reason behind that mainly is due to the fact that a lot of the properties that we do manage are just bread and butter sort of properties, recession-proof properties. Always talked about recession-proof property portfolio, and making sure that you're buying stuff with high cash flow, low risk. So a lot of our sort of tenants that are out there haven't been affected too much. If they have, they're sort of covered via JobKeeper and JobSeeker and all that, and their rents are covered from the government. So it's happy days. There's cash flow still coming through for the owners. So the luxury end of the market I can't speak for, because that's not my game. That's not what I play in. I think we'd see a different picture in that luxury sort of property market. So just my thoughts, just my views, just some feedback as to what's happening out there in the market in September 2020. Do keep an eye out for my second video, where I'll be talking about regional cities and what's happening in those markets. It's quite interesting, the trends that I'm seeing. Bye for now, guys.